World markets rose while the euro strengthened as the ECB meets today to decide on interest rates. Australia's GDP numbers helped as they were surprisingly to the upside. Futures are indicating a higher open. Can it be sustained? I'm Taylor Schrantz, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Lindsey Bell with theStreet, and together we bring you the morning call. Stock futures are pointing up after Australia reported GDP that was twice as good as people had expected, but we just heard from the ECB that they're going to leave rates unchanged, which was kind of maybe a surprise to some, but the markets are still up.
Yeah, I think the consensus was that they're going to leave it the same, but I think a lot of people wanted to see some kind of effort. They wanted to see a quarter. I actually read some notes yesterday saying that they wanted to see a half. So I think there will be people disappointed that the ECB did nothing, but I've also read notes saying that the ECB is going to be on hold because they want things to get drastically worse, because typically things have to get really bad for the politicians in Europe to finally get something done, and their summit meeting is until the end of June. So with that said, they also have a conference today, and we're all about usually the statement, but I think people want to read into what the conference is going to be about and how they're going to approach it. So right now, futures are up. We're going to map out resistance, where we can go, where we could potentially short, and just stay tactical here.
Yeah, it's going to probably be a pretty choppy market for the rest of the month, but yesterday and today, it looks like we're still getting an oversold bounce. So what levels should we be watching?
Well, I think a lot of people that sold correctly said, you know what, why wouldn't I buy a little bit below 1270? From 1420 to 1270. Same way we said you don't need to cover at the bottom. If you got short when the head and shoulders top pattern triggered at 1316, 1370, why not take some off the table? Especially if you look at the chart here, you will see that we had some type of reversal pattern right into some major support. This was Monday when we came off the lows, okay, and then yesterday we finally closed a little bit strong. And I know it doesn't look like much, but for technicals, okay, here is the 200-day. So they stopped a lot of people out, below the 200-day, probably had some chasers come into the short side with them not realizing that we just came from a coordinated pattern down to a measured move. So right here, by getting the 200-day back, sometimes uncommitted shorts cover and people say, I'm going to buy some because technically that's good. So if you did so, that was very tactical and very prudent. And now, I would say I'm approaching today with 4 longs. I'm going to sell a little bit into this 1298 area. And then it might not be today, but I do think that this will be a rally to be sold. You could sell this rally because even all the stimulus they're saying they're going to do is not going to help to slow down. And I do think that there's a high probability that the low that was here on Monday is not going to be the low for the summer.
Yeah, so you got to watch those levels closely. But the market has been a story of the haves and the have-nots. We've seen some stocks that have been able to hold above certain moving averages, and one of those stocks has been Apple. We're going to get into the sector spotlight with these types of stocks. Apple's been a high beta tech name that's been hanging in there, been doing better than the market.
Yeah, high beta has been a mixed bag. And during a market correction, what you want to do is you want to see what stocks or groups can hold higher. Where is the relative strength? So when we do bounce back, there are players in the game that you could buy that could potentially make new highs at some point. If you look at Apple, you will see, yes, it's been a little choppy lately, but all in all, it's still above the 100-day moving average, where I just showed you the S&P went below the 200-day. You had a nice move back up, and it made a higher low on Monday. So at this particular point, it's opening up about $5, $6. I do think if you're in long, you might want to sell some just on this open. I do think we're going to have resistance coming into this area. If you're long it on a macro basis, stay long it as a trader. If you bought into this reversal, I think you probably sell some. Here's your resistance zone on a short-term level to watch. That's 581.50. If we get and close above this level, and I guess today, that would show some more commitment to tech, and that maybe could help the market.
That would help the market. Another group that's been doing pretty well is retail. Under Armour has just been an impressive stock all year. This is a high growth name, an innovative brand. It trades at a pretty hefty multiple, but if you look at the charts, I think it'll tell you that this stock has momentum.
Well, if you're an investor in Under Armour, you haven't even felt the rally. You've been like, okay, market's going down, Europe has problems, my stock is still holding higher, hasn't given me many sell signals. So on a macro basis, there are stocks that you could hold, and people do invest, and there are stock pickers out there, and lately Under Armour has been one of them. You take a look at the chart, you will see, it's above the 200-day, above the 100-day. Look where it is. It's almost approaching a new high here. So at this particular point, if the market gets a little bit of follow through, I do think that traders are going to try and trade this through 101.07, which could bring us to new highs. It's hard to play breakouts in a corrective type phase, but if all of a sudden market holds, we get a new rally formula, this is a candidate for new highs. I think this is something that needs to be on your go-to list.
Target's another retail stock that we've been looking at. You mentioned this on Off the Charts at about $56. Last week they reported great same-store sales that came in better than estimates. And I think this is a stock that could benefit from the lower oil prices, give the consumer a little more confidence in spending.
I agree. And Target is somewhere my wife shops, I shop. You go in there and you always get more than you wanted, and you get it at cheap prices, which is a good way to shop in these type of economic times. Technically, though, there's prices to get involved and not. If you look here at the chart, we talked about, it was in a bit of a downtrend late last year, and it wasn't worthy of your attention. But on this day, when it broke this downtrend with authority, that's when we listed and said Target changed. You had a really nice move up to the highs. It pulled in. What did it do? It held the 100-day like most strong stocks during this correction, bounced back to the highs, couldn't break out. But the longer this thing stays above just say 55, 56, I think the higher the probability you're going to get a breakout trade into new highs. As an investor, I think you could stay with Target as of now.
MasterCard, it's down 11% still from the peak, but it's been staying above that 200-day average. So what do you think about this one?
I think that this one got a little choppy, and again, people were a little worried about the consumer, and you've been able to really time it. And if you're using a tier system, you're tiering in and tiering out. I think as an investor, you probably own it for a while and you're still doing well. But as an active trader, you look at this chart here, you will see that once you had this breakout failure here, this was a signal to sell some, right? We talk about outside days, we talk about RedDog reversals. Well, you don't get one more clear cut than this one. When it pushes to highs, closes on the lows, that's a sell signal after a huge run. And then if you didn't use that as your sell signal, once it broke this ascending channel right here, this trend that was intact, that would have broke below, that was your sell signal. So if that's the case and you got out on this day, or some guys even got short, I know my fast money traders tried to do so, you could reevaluate. And if you look here, it basically held this prior breakout around 390 at 2 nice days to the upside. I wouldn't chase it, but I think you could stay with it. You do have somewhat of a downtrend here, I would say. Another obstacle will be around 413. It's probably opening up into this gap. So I would say at this point, if you got long on the reversal day and you stayed with it yesterday, I would sell some into this 420 area. But as a macro investor, I still think it looks pretty good.
Expedia has been pretty impressive. It's been able to hold its earnings gap up, which was nice. But, there's a concern. They do have some European exposure, but it turns out they're still gaining some business there. So where does the stock go?
Right now, it's defying gravity, and it came out with earnings, and we talk about strategies, and sometimes things make sense, some things don't. A lot of guys got put out of business trying to short Priceline at the wrong time, and I think a lot of people are trying to short this, and it's not panning out for them. So if you look at the chart here, you will see, let me get rid of this little line for you. Basically, I have a strategy, guys, and everyone knows it. If you gap up on earnings and you hold a big majority of the gap up, that shows you pent-up momentum, that shows you power, that keeps it in the game for higher prices. You had a nice tight pattern, tried to break above, came back in, and then finally, traders got a clean move when it broke above this area, which we listed many times on Off the Charts. Now it's consolidating again. It's very choppy. It's definitely hard to play breakouts in a corrective environment, but again, don't argue with this pattern. If it trades above 46.50 and stays above it, because the rule is if you trade a stock for momentum, you only stay with it if the momentum stays. You saw that here, right? It traded above this level and it held above the level, which was 44, so you made money. See if it can happen again, but as you go higher, it's always a bit more prone to have a faulty type of move.
Well, we're going to take a quick commercial break here, but after the break, we're going to start to talk about some of the names that have been beaten up and could bounce on this rally that we're seeing.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
And we're back. We're going to talk about banks. They've been really beaten up, but yesterday they led the rally. JP Morgan came out with news that their trading loss was going to be over $4 billion, but I think that was expected by the market. I think Stephanie Link at Action Alerts Plus, she owns this name. She's been buying it all week on the weakness. She thinks it can go higher.
Well, at this point, it's a good sign that they finally came out with the amount of money that they lost, 4.2, which I am still hearing it's a bit higher, but they haven't said that yet. So keep that on the back burner. So the bottom line is they came out with the loss. It was down 30 cents. The stock came from 42 down to 31. And we talked about tactical strategies. Sometimes they sell the rumor and buy the news. The rumor was a much bigger loss. It came in less. So it went from negative to positive and gave you a strong day closing the high. So the good book says tactically that's a stock you can go long and stay with for an oversold bounce. But if you look at the chart here, you will see there's a difference between owning something and tactically trading it. So from when they announced the loss, you had a huge move down from about 38 all the way down to 31. This was the first time it gave you, true exhaustion, I would think. So at this particular point, it's opening up. It could fill this gap. So tactically, if you long it, I would say you sell some into this 32.70. If you want to use it as a swing trade, if you bought yesterday, sell some and trail some, and really you put your stop at the lows of the day at 30.83. And if it somehow starts to get better news and get away from this mess, maybe you see a move as high to fill this gap, which is resistance 2 at about 35.46. So here is your easy bounce type of trade, and if you're more committed to it and you want to put your stop here, chances are you will get this at some point, but I don't think it's going to happen anytime soon.
Goldman Sachs also bounced yesterday. They announced that they were trimming about 50 employees, including managing directors, to manage costs in a slowing revenue environment. ISI also cut their earnings estimate for the company, but the stock was still up, benefiting from the market bounce.
I just think it's a bounce, and I don't think anyone should get excited. Same way you could play battered sectors. This is not at this point investment quality, in my opinion. It could go higher if you look at it. Some guys looked at it as a trade. It did bottom. You have your little 2-day pivot now to trade against. It's all it is a point of reference. Here it is, 90.55. If it starts trading above this or holds above it, which it looks like it's going to do today, you have a move back to this area, which isn't saying much, but for a trade you can make money. That's 97. And then again, if this oversold rally in the indices and the banks gathers some steam, there's a chance that it could fill this gap all the way up to 105. But I would say measure your commitment. Here is your oversold bounce. It's going to take a lot of commitment, and probably S&P's 1340 versus just 1310 to get up to about 105, 106.
In the banks, Morgan Stanley was the winner yesterday. The stock was up over 4%. Now, this one has been really beaten up, so it's not a surprise that it got a bounce. Usually the beaten up names get a better bounce, but I don't know that this is an investable name either here.
At this point, guys should just be trading. If you're going to buy a bank for the long term, I hate to say it, I don't think it should be Morgan Stanley. They still have a lot of things going on with their Facebook, the way they mismanaged that deal, the high valuations. There's still some talk that they have a lot of exposure to bonds and whatnot in Europe. So, if you wanted to trade it for a bounce yesterday, it closed on the highs. If you look here, it was pretty engulfing, pretty powerful compared to some of the others. It actually went above the prior day's high, which you didn't see in Goldman and you didn't see in JP Morgan because of the oversold nature. I would say sell some on the open, and it could see this 1385. And if you want to put in relative terms like the rest of them, there's a gap that gets filled up to 15, but you're going to need some hell of a market to get that done. Right now, I would say just take the trade.
How about Bank of America? This one, can it get above a 200-day moving average?
From 10 down below 7, I think there's some value there. Some guys entered it. I think the quick trade's probably to about 760, 770, and then it's just up to you if you want to sit in this thing, because it's going to take a long time to get back above that $10 mark.
Why don't we go into some quick hits? We'll kick it off with retail again. Costco. This stock has been on the move. Stephanie Link owns it at Action Alerts Plus. She likes it. They had a great sales number for May. Traffic was good. That's a good sign for them, and they'll benefit also from lower commodity prices.
Yeah, and again, it's a smart way to shop. Big bulk, low cost. Why not? Chart looks good, nice tight pattern. Guys, on my site, we're talking about it yesterday. If you look at the chart real quickly, it starts trading above 86.77. Next level here is 89.
Microsoft, that stock was down a little bit yesterday. Where do you see it going?
Microsoft, one of the mega caps that had a great run early in this year. It's pulled back to the 200-day. Mark Sperling, head of the desk, was talking about buying it yesterday. He's long it on his virtual trade floor, went long in the 200-day. If you look here, you will see it's holding the 200-day. It's got a pretty sharp decline here, pretty sharp descending type channel. To me, if it resolves to the upside, I think if you're not in an overnight, if it holds above 28.93, you do have a move back to 29.64, and then bigger resistance comes in at 30. So if you sold it correctly, buying it the 200-day, I think makes sense. I think there's a lot of value still in Microsoft. It just it moves very slow. And guys made good money in the beginning of the year. Don't expect it to move like that once again later this year.
All right, Lululemon, we talked about Under Armour earlier. Lululemon is another, high multiple retail stock, high growth stock. What does that chart look like? Is it as good as Under Armour?
It's been choppy. The chart doesn't look as good as Under Armour, but it's still in the game. I think people are still invested in Lulu. It has the potential of higher prices. I wouldn't be rushing to own too much of it, and as a trader, it did close green yesterday, above the previous day's high. It does have some room for a quick trade back to 73, but I think just take the trade if you're not looking to be long for any particular time.
Walmart, we took a look at before. This stock really was on fire after earnings, despite the Mexico scandal. But what's the chart look like?
The chart's getting a little choppy up here. It just had a long move. It was a lot of guys made a lot of money. This was my retail stock of the year back in December, and it's performed very well. In this upper area, I would say, if you're long tier 2, have an upper level stop, because if it breaks this area that I've outlined here in the chart, it could correct a bit. So 65, 65.30, as long as it stays above there, I think you could see higher prices again. But if it starts to break below that, some guys might look to short it. Some might think that you can have at least a pulling down to 63.37, maybe even to retest this prior breakout. So watch it closely. Market also rallied yesterday, and this had a red day. So always a little bit of a of a flag type red, whatever. Something to notice.
It's a good point. How about gold? On Friday, it really ignited. You got into it. It's been holding up pretty well today. I think it's indicating up on the back of potential QE3 rumors, but.
Gold, a lot of people have been hurt, actually. They thought that there was no way it couldn't get to 2,500, it couldn't get to 3,000. But meanwhile, you look at the chart of gold and you will see, back in late September, all you had to know is this reversal pattern. At this point, you didn't know what it would really lead to, but you always take notice on a day that you have an outside day, especially after somewhat of a parabolic move, which we did see here. So anyway, that was sign 1 to get out of the way. Here was a nice little pattern for sign 2. PS, it's been in a downtrend ever since. A lot of guys started to play it. I think I tried it a few times as it's tried to break this intermediate trend that was ignited by that Fed day. Look at the size of this bar, engulfed all of this. So at this point, it broke lower, and now it's trying again. So on this day, I said, you know what, I'll take a close look for you. I'm going to get long. It ignited. I'm like, as long as it shows commitment and holds this gap, because I love when gaps hold, it shows you power, some shorts a trap, pent-up momentum. I think it's a tier 1 to tier 2 trade, and if it could get above here, I'd like to add. And unfortunately, I was hoping it would happen intraday, but gold always trades overnight and it doesn't. So at this point, I would say it's gapping up. If it could stay above 158.31, which would be nice, and you could actually buy it there, I do think the next level for it to test is about 160, 163, and that'll be a true testament on whether or not it's just a trade or potentially it could start a new up move.
So going into trading today, you probably need to look at the key levels, where the stock's been. We talked about some stocks that have been strong, that are good for the longer term, and some that might bounce on this, but maybe they're sellable.
Yeah, well, there's some things that you could stay with long, and some things that are just an oversold bounce. And just know what you're looking to get out of it. You have a lot of battered and bruised sectors out there that have been annihilated. So, on day 1, day 2, day 3, it's hard just to short it, but just know that if you're playing from the long side, where it can go. So at this point, we mapped out some areas in the S&P for you where the easy bounce can go to and where the resistance will start getting heavy. So just have a plan, overlap your stocks with them, and take the trade. I think on the open, a lot of guys are going to try and fade it. If it doesn't fall apart in the first hour, potentially we get some follow through into the close.
So we talked about some key levels for people to follow on the S&P. We talked about stocks to watch, and we talked about gold. So that's your game plan for the trading day. Be sure to tune in with Scott and the T3 Live for the recap of the charts at the end of the day.